Welcome to this FATF webinar. I hope that I'm just checking to see about arrivals. So yes, it seems we have started. Wonderful. So welcome to this FATF webinar, where we will be talking about the unique money laundering and terrorist financing risks in the trade of works of art, antiquities, and cultural objects. Which is obviously follows a report that was done earlier this year by FATF, which I'm sure many of you have had a chance to examine. The global trade in art and antiquities and other cultural objects is a multi-billion-dollar industry. This reached at 65 billion in 2021, 68 billion in 2022, according to the UBS Art Basel report. It's a very diverse industry, both in terms of size and its business model. So there's a lot of different types of participants who are involved in this market. You've got everyone from dealers and auction houses, galleries, storage facilities, intermediaries, and as well as other service providers. We've got a diversity in the kinds of objects that are involved. Work painting, everything from paintings, lithographs, sculptures, tapestries, increasingly to new types of digital art, such as NFTs. And indeed, all kinds of other objects that, like handbags and other items that are increasingly considered collectibles and cultural objects. It's important to note that the vast majority of the participants in this market have no connection with illicit activity. It's a legitimate market. These are products that serve a normal purpose. It's not a inherently shifty industry. Nonetheless, it is an industry with certain features that create certain vulnerabilities when it comes to money laundering, and indeed terrorist groups can exploit the market for cultural objects either by excavating items themselves, taxing those who do, or otherwise engaging in the smuggling of these objects to help finance their operations. The question is, what do governments, banks, and businesses need to do to put a stop to this? Just as a reminder, there are no explicit requirements in the FATF recommendations for professionals involved in the markets for cultural objects. However, FATF recommendations do require jurisdictions to identify, assess, and to understand money laundering and terrorist financing risks, and to implement mitigating measures where higher risks are identified. Some countries have taken regulatory actions to mitigate the money laundering and terrorist financing risks identified around this particular market, the UK, for example. But obviously, there's a variance of approaches in different jurisdictions. Today, I'm here from the Reuters studios in London. I'm Tom BERGIN. I'm a journalist who specializes in investigating financial crime, corruption, and money laundering. And I have the privilege of hosting a wonderful panel, a very high quality and international panel of experts. I'm just going to introduce them all to you. Firstly, we have Paul Dergarabedian, who is Senior Financial Crimes Specialist at the US Department of Treasury. We have Victor Ivanov, who is a policy officer for anti-money laundering and countering financing of terrorism at FISMA at the European Commission. FISMA is the Directorate General for Financial Stability and Financial Services and Capital Markets. We also have Rena Neville, who's the Director of Corinth Consulting and also lead anti-money laundering consultant at FCS Compliance Art Division. We also then are pleased to have with us Dr. Donna Yates, who is a professor of criminal law and criminology at Maastricht University. Hello to all of you, our panelists, and thank you very much for taking the time to join us today. Before we get started, just a little bit of housekeeping as such. I think that you can probably all see that at the bottom of the Zoom display, you'll see an area where you can post questions to the panelists. The way this is going to work is if you can post them there, we will try our best to get through them. We can't guarantee that. The run of things will be, there's a number of topics that we want to discuss. We're going to have some questions around each of those. Through some of those, we may get to some of the questions, but if not, we're going to try our best to get through them all at the end, where we'll have about 15 minutes or so for a Q&A. So with that, I'd really like to kick off the session. And specifically, first of all, I'd like to really deal with the area of money laundering and terrorist financing vulnerabilities and threats in the art and antiques market, what exactly they are. So with trying to get an understanding of that, perhaps I could put my first question to Dr. Yates. Donna, you're an expert in the market for high value unique goods such as artworks, and can you tell us a little bit about this space? You know, why is it one that we should be looking at, and what are the specific vulnerabilities that exist in the art market that we should all be thinking about?
Thanks, Tom, and thanks everyone for joining us. Yes, good question. Before I start, I want to say that I know we're focusing on money laundering and terrorism financing, but I wonder if a good way to think about these vulnerabilities is just really the art market's vulnerability to financial crime or subversive crime, crimes of manipulation where value is under or poorly reported and so on. So think lying on your taxes, tax avoidance, hiding funds, and so on. Just want to throw that out there to start. But and the interesting thing about art, well, there's a lot of interesting things about art, but the interesting thing about art is that it's a diverse global market where relatively small and portable, carryable objects carry a lot of value. And that value is clearly financial, but artworks are not necessarily always regulated in the same way as we regulate money or other financial products. So in a way, some of the issue is that these small things store a lot of value, and that value is difficult to put a pin on and can be manipulated in certain ways. Other issues are there is kind of a historic tradition of discretion within the market, of legitimately protecting identities and not necessarily revealing details of past sales. Artworks pass through different intermediaries. And often it's difficult to track the origins of certain types of artworks, meaning these things travel around the world through different hands, are valued in potentially different ways, and those flows represent the flows of money as well.
Well, wonderful. Thank you very much for that. That's very helpful at giving us, I think, an insight into the specific kind of types of vulnerabilities in this market and how it maybe differs from other markets where the securities, as we may call them, are used for laundering. I'd like to just dig a bit deeper on this, though, and think a little bit more about the real world examples. Could I bring in maybe Victor on this? Victor, could you maybe talk to us a little bit about some of the common methods or techniques that are employed by criminals to launder illicit funds via the art market? Can you give us a sort of real world examples of where that's happened?
Sure. Thanks, Tom, and good afternoon to all our listeners. Firstly, I would like to say a few words about the methods and techniques which are being used by criminals. What the findings of the report, of the FATF report, show is that criminals use traditional money laundering techniques, such as the use of cash and the use of third-party intermediaries to conceal the true source of criminal proceeds generated from various crimes, such as, for example, corruption or drug trafficking. Another method which is demonstrated by the case studies cited in the report is over and under pricing, which is also linked to one vulnerability which Donna mentioned before me, namely the subjectivity of pricing in the art and antiquities market. This can be also used to conceal the value or to legitimize illicit proceeds. In addition to money laundering risks, the industry can also be abused for the purposes of generating illicit proceeds. It is vulnerable to several proceeds generating crimes, among which forgery, fraud, theft, and illegal trafficking as well. On your question on real life cases, the report includes many case studies showing how the art and antiquities market could be abused for money laundering purposes. One high-profile case that is often cited in the news involves misappropriated funds from the One Malaysia Development Bank, the so-called One MDB. This case involved a criminal scheme to launder funds that were embezzled from this fund by purchasing high-value property, yachts, and also fine art by Monet and Van Gogh. This was accomplished using fraudulent documents and a series of complex shell companies with bank accounts held globally. A second good example, a second interesting case, which is cited in the report, comes from France, for instance. In this case, a businessman suspected of having committed various criminal offenses in the context of his business activities, embezzlement, corruption, had purchased various works of art from a gallery for a total amount of more than 3 million euros. What is very interesting in this case is the fact that 1/3 of the amount was paid by multiple cash transactions ranging from 18,000 euro up to 210,000 euro. The case represents a potential money laundering operation in which the businessman aims to launder the proceeds of crime derived from his illicit activities carried out elsewhere. I would stop here with those two case studies. I hope they are sufficiently clear and demonstrate how money can be laundered in the market.
That's really interesting. Thank you very much, Victor, to hear those. Can I maybe turn now to Paulie, Paul Garabedian. Paulie, could you tell us a bit about terrorist financing? Victor was obviously talking there about criminals laundering criminal money. Could you tell us a little bit about how terrorists use the market for art and antiquities to their ends?
Yeah, thanks, Tom, and welcome everyone to the webinar. Thanks for joining. As people may know, the FATF has been looking at terrorist financing techniques for some time now, and in particular, we first learned about some of these techniques through the cultural object, industry in 2015. With respect to the terrorist group ISIL, who has really used two known terrorist financing methods. The first method is that ISIL has collected funds from the excavation or looting and the trafficking of cultural objects within the territory that they control by imposing a so-called tax on non-ISIL members to do that activity. And that's a way for them to generate funds. Another way for them to generate funds within the territory that they control is by selling these same items that were looted or trafficked to third parties. Keep in mind, though, that once the item is in the hands of a third party, meaning no longer in the hands of a terrorist organization, that could be a smuggler or a transnational criminal organization, the terrorist group is no longer able to gain any further revenue from them. And to the point that the question you raised to Victor, the report does contain a number of very relevant case studies on the use of terrorist financing techniques. For example, there's one case in there that involves complicit art dealers and gallery owners who knowingly laundered funds from what are called so-called blood antiquities, sort of these antiquities that were looted from these types of sites. They did this by using a network of art traffickers in several countries around the globe. And these art traffickers would set up different companies and corporations to essentially act as financial intermediaries. And I'll stop there for now, but happy to discuss this further. Thank Tom.
Great. Just quickly follow up. Obviously, that the ISIL case was widely reported a couple of years back. The reality on the ground has changed for ISIL quite a bit. Can you tell us to the extent that that's still the money laundering or abuse?
Tom. That's a really good question. So look. While it's true that ISIL, the core ISIL that was operating in Iraq and Syria, lost most of its territory or majority of it in 2017, which has really likely eradicated that source of revenue from them. I mean, we need to be aware that ISIL has a number of regional affiliates, and as well as there are other types of terrorist organizations that are out there that continue to exert influence over territories and other parts of the world. One example would be the Sahel region in Africa. In these types of terrorist organizations may possess cultural objects that could generate funds. Again, we don't know, we're not entirely certain, but many of the items that they have previously looted, meaning ISIL or other terrorist organizations, are probably still in circulation as we speak in different types of illicit marketplaces. Thank you.
We've got a couple of questions that really speak to some of the things we've just been discussing coming in, and I'd like to go from these are coming from the people who have signed in. First one, I think I'll address to Donna. We spoke there about the use of mispricing to money of objects for money laundering. Donna, how would should we be looking at this issue of the valuing and pricing of pieces of art and the correct assessment of that, and how can the authenticity of artworks and antiquities be confirmed?
Well, I think there's one answer to both of those questions. The answer is consulting experts. Within the art market, art does have a particular value. This is what the artwork can sell for in the open marketplace. The problem when it comes to issues related to money laundering, other financial crimes related to art value, is that these transactions aren't necessarily taking place in this open marketplace. So value might be being asserted through false expertise or through various types of bidding manipulation and so on. So in a sense, again, expertise is the answer to this question, but expertise isn't always in the room when we're talking about financial crime related to artwork. Similarly with authenticity, again, authenticity can be controversial, but it's a matter of expertise. But yet again, an inauthentic work that is being used to launder money or commit some other form of financial crime is still something that is being used to commit crime. So in essence, the authenticity of the piece doesn't matter in that moment. I think it's an interesting topic, but it might be a topic that is outside of our discussion for today.
And we've got a question in as well about digital art. Perhaps, Rena, you could help me with this. Does money laundering differ for digital art forms, e.g. NFTs, versus traditional ones like those Victor was mentioning, e.g. cash and third-party intermediaries?
First, thank you, Tom. Thank you, everyone. I'm happy to be here and with the panels and everyone for attending. I'll refer quickly back to one of the things that, Donna said. Certainly NFTs are ripe and vulnerable to market manipulation. And they're certainly vulnerable and open to third-party intermediaries, or even the same person buying and selling over and over, then to resell to somebody else. So NFTs, in my experience, for the more healthy, legitimate side of the market, which is where I live, cash is frowned upon, and so the non-cash transactions aren't allowed, and that's obviously true for an NFT. I think that we've seen some fraud, theft, and market manipulation for the art-related NFTs for sure.
So it's a problem there too. Well, thank you very much. We talked there really about what terrorist groups do, what criminal groups do. I'd like to move the discussion a little bit on to market participants and their operations. Ren, if I could just keep with you for a moment. You've worked in this area. You've worked for major auction for 30 years now. You've worked in major auction houses, and now as a consultant to an advisor to market participants. Can you tell me a little bit about the changes that you've seen in the awarenesses of participants and the practices they're doing, and kind of what are the questions they're coming to you now as an advisor about how they should operate?
Yeah, it's a really good question. There's been a dramatic shift in the last 3 years. I mean, the first that kicked it off was the EU's fifth money laundering directive that went into effect January 2020 across Europe, and which the UK volunteered to abide by, even though they were exiting the EU. That was a dramatic delineation, as the UK, Paris, other trading centers on the continent are a big part of the art market. And the other high impactful event was the Russian invasion of the Ukraine and the sanctions, that because there are so many high profile Russian collectors. So the combination of those events, really, there's been a huge shift in the response of the trade, the response of collectors to questions asking for the standard customer due diligence, the ultimate beneficial owner information, where, 3 years ago, we were spending our time talking them off the ledge from being offended that people thought that they were something wrong with them, to today where they're more accustomed to the process and don't take it so personally. So that's really nice to see, that there is, even at international fairs, there's less resistance among the galleries and art advisors, and the collectors, I think, are understanding that this isn't necessarily something that the art market asked for, but that it's a requirement, just the way when they open a bank account. So that's been a big change.
Interesting. Thanks, Serena. If I could maybe go to you, Donna, just on this point. Rena's talking about a change of attitudes and that and general practices. Just in more specificity, I mean, could you tell us a little bit about, what do you think, as somebody who's spent a long time in this space, what should the private sector participants be doing, perhaps that they don't have a practice in the past of doing when it comes to KYC, customer due diligence, to prevent, inadvertent involvement in money laundering?
Well, the first thing I want to do is acknowledge that many, even most art businesses are very small businesses. They're not all the giant auction houses that have a significant amount of resources and budget and so on. So in a sense, bringing in this necessary bringing in of know your customer and various types of anti-financial crime checks, that's a significant burden on small businesses that don't necessarily have any expertise at all in this field. They're art experts. They're not necessarily financial experts. So I want to acknowledge that first. And I think that should be a starting off point for any way that we're thinking about this and what they should be doing. I think that something that Rena said is very important, which is that she's seeing collectors starting to understand that this is providing more information is required. And I think having the collectors on board, sort of helping the art businesses along, kind of accepting this is very important. But I think as a first step, of course, the art businesses need to fully acknowledge that they may be vulnerable, even if they are good actors with positive intentions. And they need to learn to notice the red flags and kind of have a good pathway for reporting them and sharing that information. That's a big ask, but I think that's something that we can kind of work towards together.
I mean, just on that, and this is the question coming in, I think it speaks to that. Is KYC in the art market executed in a similar way as it in banks, or are there differences? What are clear red flags for private individuals in KYC? And also, just it strikes me, just you mentioned there about raising flags. Who are they supposed to do it? How is that meant to happen?
Good question. There isn't actually a good answer to that yet. I don't think. I think the bigger picture has to be around building trust between the art market and the kind of financial crimes units and so on that they could potentially be reporting to. I think within individual countries, the countries themselves need to kind of publicize the reporting pathways that art businesses can engage in, because again, we shouldn't be asking a small art business to know the entire structure of reporting financial crime within a country. I think I would struggle for a few moments to figure out how to do that myself. I'm not quite sure if that answers your question, but again, I can't tell you if it's the same as done in banks, because I don't necessarily study banks. But I think again at this kind of widespread trade market level, it's on us essentially to make the reporting pathways clear to everybody, to make them fairly easy.
Paulie, Victor, anything on that, just very quickly, on red flags that the professionals should be looking out for?
Just to note that the report contains a number of red flag indicators to help both the public and private sector identify suspicious activity, and there's caveats on there in terms of how to use these risk indicators with respect to other contextual information that might be available to you. And then obviously, the private sector and financial institutions should obviously take into consideration, customer profile and customer due diligence information and things like that. So people should feel free to look at that aspect of the report.
Paulie, if I can just keep you on that, just we spoke there just about what the private sector should be doing, looking across the public sector when there are situations where we know that where artwork has been, or cultural objects have been used in money laundering and crime. The authorities tend to be focusing on getting the material and getting back to the rightful owners or the appropriate authorities. The investigation often tends to die there, and not a lot of investigation into the money laundering aspect or the participants involved in that. What are the main stumbling blocks for authorities, and why they don't actually explore that side of the crime more?
Yeah, we looked into this quite deeply, and we had a lot of investigators and prosecutors and different and financial intelligence units really help us out quite a bit in terms of identifying some of the challenges and shortfalls that come with identifying money laundering and terrorist financing activity or financial crime activity in this space. And a lot of it's not that surprising. I mean, one is a very traditional challenge, which is really a low prioritization of financial investigations amongst law enforcement authorities. I mean, this challenge has been sort of perennial. I mean, it's been confirmed by a number of different reports by the FATF. and also by the current round of mutual evaluations in terms of immediate outcome 7, and really the low effectiveness that we're seeing there. Other challenges have to do with capacity building and ensuring that law enforcement has the right expertise to pursue these types of investigations, not only from a financial crimes or financial investigation perspective, but also from having some knowledge of the industry and how the industry works. And then another challenge has to do with sort of the cross-border nature of these market participants and sort of investigative challenges when you're dealing with these types of cases, which obviously involve more than one jurisdiction. So you have challenges with respect to gathering evidence and using things like mutual legal assistance and things like that that are, you know, international cooperation issues that are traditional. But if we have some time, Victor and I would be happy to talk a little bit more about how we've tried to overcome some of these challenges. Thank you.
Thanks. Well, yes, I mean, if I could go to Victor then. I mean, Victor, you know, for the policymakers' perspective on this, you know, countries regularly assess the exposure of the risks with respect to different sectors of their economy to money laundering risk. You know, if a country does identify its arts and antiquities industry as a risk, you know, what good practices can be implemented there to sort of address that, to make people aware of it, and just to try and tackle that problem?
Well, firstly, Tom, I think, and I'll build upon what Donna said earlier, that it is very important to raise market participants' awareness of the money laundering and terrorist financing risks they face. This can be done, for example, through the development of training programs, guidelines, codes of ethics for market participants that are available both publicly and privately as well. We have seen a number of member states here in the European Union which have issued extremely comprehensive and detailed guidelines to market participants on risk indicators, on possible typologies in the markets, also on how to, for example, file suspicious transaction reports with their financial intelligence units. A range of institutions, including multilateral bodies, non-profit organizations as well, have published documents aimed at raising awareness of the risks faced by the industry. I think it's also to be noted that various jurisdictions have begun developing internal specialized training courses and working with the private sector to start partnership initiatives, issue investigative guidance as well. All these programs and all these initiatives ultimately are aimed to help operators, help jurisdictions to better detect transactions linked to money laundering and terrorist financing. I mentioned partnerships, and there is one major development in the area of anti-money laundering and countering the financing of terrorism, which I think is worth mentioning. This is linked to the setting up of public-private partnerships across different countries, across different jurisdictions. In those public-private partnerships, they are usually with the participation of the financial intelligence units of the various countries, and they work together with private sector entities, with the so-called reporting or obliged entities. They share information on typologies, on patterns, on risk indicators related to money laundering and terrorist financing in the art and antiquities sector, which, amongst anything else, this also helps to build trust between the financial intelligence units and those private sector operators. Back in October 2022, the European Commission issued a document which maps the state of play as regards the setting up of such partnerships across the union, on the opportunities, on the legal challenges, on the good practices to be put in place, and we see this as a trend which is growing. I just wanted to add, because we've talked about customer due diligence, we've talked about the filing of suspicious transaction reports, and Arena mentioned earlier that in the European Union there is regulatory oversight. This regulatory oversight requires persons trading or acting as intermediaries in the trade of works of art, including when this is carried out by art galleries, auction houses, or free trade zones, to carry out customer due diligence. In other words, to identify their customers, and the beneficial owners of those customers, and verify their respective identities. When those market participants detect potential suspicious activity or suspicious transactions, they have to file a suspicious transaction report with the financial intelligence unit of the member state where they operate. I will stop here.
Thank you. Thanks, Victor. Rena, just if I could follow up on that with you, perhaps. I mean, Victor is talking there about the importance of collaboration and partnerships. Could you maybe tell me a little bit about how you think that governments should go about better collaborating with stakeholders, such as, art industry professionals and consultants?
Sure. I think that the art market, trade associations and groups are desperate for more macro verified independent data. I think they read a lot of anecdotes and they'll say, oh, well, that doesn't apply to me. So they really are not having the bird's eye view that either individual governments or many governments would have. I also think the art market, and maybe also this is true for the governments, I think the antiquities market has a unique set and really is different than sort of the rest of the art market, right? The antiquities market has the added burden of where's it coming from? And was it illegally exported? Was it dug up? Was it sold for a terrorist? Which is sort of the opposite of the rest of the market, which is looking more at who's paying for it, where's the money coming from, who's the owner. So the set of risks and the set of appetite for that is really, really different, I think, in the art market and the different sectors. And I think the art market lets it go when they feel it's not relevant to them. So I do think that some really good, hard, global, current data would really help the partnerships. And the art market can provide some of that. I know HMRC, the regulator for the UK trade, is doing lots of sort of audits of its regulated art sector and is aggregating that data. And they will create a lovely database, in 2, 4, 5, 7, 10 years time of what have they found by doing all these audits, and what is the ratio of risk and violation to compliance. So I think that would be a great, I think the art market believes that governments have a lot more information than they're sharing about the nature of what they're seeing. And I think a little bit the market feels sort of shadow boxing because it's not seeing all of the risks all of the time. And they don't, the healthy market, as you said at the beginning, the vast majority of players are decent folk trying to grind out a living. So they're not seeing this truly criminal element that's on the fringes. And I think for the art market, the thing that's a problem is I think, this is guess, speculation, most of the money laundering that's happening is a result of white collar crime. So nobody knows that the white collar criminal is a white collar criminal until everybody knows it. So what they have to do is get their ducks in a row as they're behaving, but it's not like they are dealing with we haven't seen, as far as I'm aware, major drug dealers, major human traffickers, major organized criminals active, in the healthy art market.
Yes, that'd be interesting with data. Obviously, with people like the HMRC might need to overcome some historic reticence to share data. So for certain government departments that can be quite difficult. I just wanted to go back to Victor on something there that I discussed. He mentioned it a little bit, and Donna, we spoke about earlier, was about suspicious transaction reports or suspicious action reports. Activity reports. It's an issue. There are not a lot of these in the sector. How Victor, should we go about trying to improve this kind of reporting?
Thanks, Tom. That's a very good question, which I think touches upon a number of different domains, so to speak. The first one I touched upon earlier. I think it is important for the financial intelligence units to raise awareness of the risks and the risk indicators in the market, so that art market participants and antiquity dealers, they understand better the kind of risks they face, and they calibrate their detection systems, so to speak, meaning make them more effective in detecting suspicious activity which is going on in the market. A second important point here is supervisory action. Supervisors have an important role to play when it comes to the effective enforcement of the anti-money laundering and countering the financing of terrorism regulatory regime. They have to carry out on-site inspections as well, to make sure that the obliged entities, the reporting entities, comply with their obligations which stem from the regulatory framework. And a third point, which I think is important to highlight, and is linked to what Polly said earlier when it comes to challenges, is capacity building. I think that these markets are complex markets. The way they function is complex. The nature of the objects which are being dealt in those markets is also complex. And on many occasions, what we noticed when we were preparing this report was that there is no sufficient knowledge in the public sector, be it among financial intelligence units, be it among supervisory authority, be it even among law enforcement authorities, on how those markets function and how to detect, prevent, and investigate crime properly in those markets. So one important thing is also to improve the knowledge in the public authorities, meaning more capacity building exercises for FIUs, for supervisors, for law enforcement authorities, because in the end, in order to effectively supervise how someone complies with their obligations, you have to understand how this business operates. This is, I think, a key point to answer your question.
Does everybody know, I mean, are there structures in place such that every participant knows who they should report a suspicious activity to? Is there do all member countries have those structures in place?
Is a question for me, Tom?
Oh, sorry. Yes, it was a question for you. Just to follow up on that, I mean, because obviously, you know, who do they send a letter to? You know, what's the format of the suspicious activity report? Is that formalized everywhere as it should be?
It's formalized everywhere. Absolutely, every country in the European Union has established a financial intelligence unit. Those financial intelligence units, in some cases, are part of the law enforcement authorities. In other cases, are of administrative nature, of hybrid nature as well. So every country has put in place a financial intelligence unit. Not only in the European Union, as a matter of fact, I think globally, pretty much in every jurisdiction, there is a financial intelligence unit, which is a central body for the receipt of suspicious transaction reports or suspicious activity reports from the obliged entities under the AML, anti-money laundering, countering the financing of terrorism framework.
And that's communicated to everyone who should know, every small art gallery and everybody.
I hope so. I hope it is communicated, because in the end, as I pointed out, awareness raising is key as to how the framework functions. I have personally seen, and it's publicly available, very useful guidance which has been issued by the FIUs of France, by TRACFAN, and Finland as well, by the FIU in Finland as well, to the art market participants in those two jurisdictions on how the framework functions. So I hope other financial intelligence units have followed these, I think, very good examples.
Okay. Well, publicity seems like a good guidance. If I could go to Donna, I have a question here on the chat. It says, what research gaps exist in understanding the typologies and methods of money laundering and terrorist financing, specifically related to arts, antiquities, and cultural objects? And how can academia contribute to filling those gaps?
Well, I'm always happy to say positive things about academia. But what academia is good for is seeing the big picture, the very small picture and analyzing results. So my job as an academic isn't to fight and stop crime, arrest anyone, prevent crime from happening. I'm here to understand crime. So academia can take a longer view of studying kind of deep, intense patterns of these types of crime through various criminological, sociological, and so on techniques. And kind of develop a higher understanding of modus operandi, identifying very clear gaps in regulation and so on. But also when we put regulation in place, academia is here to kind of check to see how it's working, to see if there's missing pieces or manipulation and so on. So I mean, a number of specific gaps, one that I and some of my colleagues here in the Netherlands are going to be looking at soon, is how artwork is valued, particularly towards the creation of new financial products related to artwork, whether this represents a manipulation risk for all sorts of financial crime. This is the Priceless Project. And again, we get 5 years to take a really broad, multifaceted look at this issue and hopefully answer some bigger questions that it's harder for people who, need to be making arrests to answer, so to speak.
Great. Paulie, if I could maybe turn to you, I've got a question I think you could help with. It's are sanctions imposed by governments or bodies like the US, EU, Australia, an effective way to combat against art crime and antiquities trafficking? Is the sector more alert to assessing sanctions risk now more than the money laundering, terrorist financing risk? And does the experience of sanctions imposed on the movement of cultural goods in response to the Iraq War, or sanctions which target the movement of luxury goods into sanctioned jurisdictions, which could include art and antiquities, provide any insights on this?
Thanks, Tom. It's a very complicated question, and I could probably spend a lot of time on this, and I really don't want to go down a rabbit hole, but I will just say, generally speaking, the use of targeted financial sanctions is something that should be in every government's toolbox to prevent, for example, terrorist financing activity. There are long-standing obligations within the FATF standards on the use of targeted financial sanctions with respect to terrorist financing activity. So, for example, there are a number of UN resolutions out there having to deal with, diluting and what I mentioned early on in this webinar, and the excavating by ISIL. Now, if countries were to implement those UN sanctions, either multilaterally or bilaterally, it would be a mechanism to basically help target and identify and freeze potential assets that are associated with those groups. Again, it gets very complicated in terms of the world of sanctions and this arena, mainly because of the use of third-party intermediaries that has come up as like a main theme with the buying and selling of these objects, and whether or not those third-party intermediaries are actually part of on a sanctions list, for example. But it's something that we're looking at closely, and like I said, we generally encourage the use of unilateral or multilateral targeted financial sanctions to complement other tools that governments have.
I've got one for Victor. Victor, can you see convergence between antiquities trafficking and other trade crimes? Arms, drugs, natural resources, etc. And if yes, could you provide examples? Specifically where organized crime groups are using the same channels for both these activities.
Thanks, Tom. That's a complex question. I would say that as part of the report, we did not really touch upon this particular issue, but one thing which is clear is that organized crime groups are more and more polycriminal in nature. This is something which was also highlighted as part of the EU Serious and Organized Crime Threat Assessment, which was issued by Europol, the law enforcement cooperation agency in the European Union, that organized crime groups are involved in different types of criminality. My answer would be yes. I think we can suspect that those organized crime groups use the same routes. For example, when it comes to drugs trafficking and the trafficking of cultural goods, of antiquities. Also, I think one important detail as well is that in many cases, in many case studies, cultural goods are stolen during burglaries or by theft. Showing how these different types of crime actually converge, and then this also those cultural goods which have been stolen are afterwards trafficked.
Yes, I guess that emphasizes the importance of the other point that Polly was discussing about earlier, of actually going beyond the just getting the artworks back when the authorities get involved in that. Maybe look at the channels behind that. If I can move to Rena. Rena, what are the global auction houses doing in terms of specific actions that they're taking to address anti-money laundering risks? Are they doing much? I mean, is there self-regulation or what's happening in that space?
Yeah, it's a good question, because obviously the UK and Europe are regulated. The US does not yet have an AML regulation for the art market. We're waiting for the antiquities regulations to appear and be implemented. But for the moment, it's self-regulation. And then the other big market is Hong Kong and China, and they do not have art market AML at all. So these global auction houses are in a really tricky situation because of and also as our collectors and art dealers. But the big auction houses, the top four, the big four, have implemented worldwide standard policies, and I think they're largely governed by the Fifth Directive. So they are trying to elevate and have a standard policy. But you also have, with the big auction house, it's got the biggest legal and compliance department. It's going to have the biggest resource of outside counsel. They are going to have the biggest visibility in the objects being sold. So it's not the first place I would run to if I were trying to launder proceeds of crime. Having said that, we know that it's happened in the past, but that was before the Fifth Directive. I think there's been a big shift.
Well, there's a tip for anybody who's joined in with the worst of intentions today. If I could, before we wrap up, because we are getting to the end of the session now, if I could just ask each of the panelists to identify a red flag that people, the authorities, market participants should look out for, a red flag of AML risk around art and antiquities.
I can start.
Oh, sorry. I should. Donna, yes, thank you.
Obviously, it's all very context specific, but one thing to think about and maybe question is an artwork suddenly selling for a lot more than it did in the past, or a lot less than it did in the past. So surprise price differences. Sometimes that's completely normal, but it is something to ask a question about.
Good. And pricing anomaly. Yes, as journalists, that's when we do look out for sometimes on different things. And Victor, if I could ask you, same thing again, a favored red flag people should be looking out for.
Oh, I would definitely highlight the use of cash, use of large amounts of cash. I gave an example with a case in the beginning of our webinar today, and it's important to say that in some cases cash is still king, and I think the use of large amounts of cash, of banknotes of large denominations is a red flag, and should definitely raise some attention.
Great. Rena, if I could ask you.
I think for me, in my experience, I break the red flags into tech red flags, things that could be discovered through a database or the global network. I think the human red flags are the most risky, and the biggest for me human red flag is a client asking odd questions and hesitating to answer and changing their story, either not knowing enough about the artwork or its provenance, or not knowing enough about how they want to invoice or why they want to invoice. So that human interaction, which is, I think, hard for the art market to capture.
And Paulie, if I could just finish with you, a favorite red flag that people should look out for.
Yeah, it's kind of like asking you who your favorite child is. All the red flags are all the red flags are very relevant and
my
useful.
children ask me that question all the time.
Yeah,
sorry, go ahead.
But I think, just to add on what the other panelists have said, we've identified a number of red flags having to do with really common sense issues. So if somebody is buying or purchasing art that is vastly, spending more than what the art is worth, that should raise some concerns. As Rena pointed out, I mean, if they're really not interested in the provenance or the history or the artist or anything like that, that should be a concern. And then sort of these sort of the use of social media and third-party intermediaries that are being used to basically advertise cultural objects that have been looted. So that should be a concern as well when you see those types of advertisements outside of the sort of traditional industry that's generally used to buy and purchase and sell these types of goods.
Wonderful. Thank you very much. Well, with that, really, our time has ended, and I'd really like just to wrap up. But before doing so, I'd like to really leave with a couple of messages that we've tried to emphasize here today. One key point is that the vast majority of market participants in the arts and antiquities sector are legitimate. They don't have any connection with illicit activities. The industry is a legitimate industry. Nonetheless, there are certain market structures and long-standing industry practices which represent vulnerabilities for anti-money laundering. In respect to money laundering. I also would like to make the point, or we've tried to make the point, that private sector actors such as auction houses, dealers, galleries, art, finance service providers need to understand who their customers are, including who the ultimate sellers or ultimate purchasers are, and to conduct enhanced due diligence if red flags like those just discussed do arise. Finally, then, law enforcement agencies need to prioritize money laundering and terrorist financing investigations beyond just retrieving stolen or looted artworks, as is currently tends to be the practice, to make good use of cross-border cooperation and communication, and to provide training to raise awareness. So with that, I'd like to say thank you very much to all our panelists today for contributing their experience. Thank you to everyone who's signed on today to listen and participate in this. I'd really encourage everyone who hasn't done so to go away and to review the report that was released earlier this year by FATF. And also, of course, just to thank the FATF Secretariat for hosting this discussion. So I say goodbye and thank you very much to everyone for their participation today.
Thank you very much, Tom.